Welcome back to another pipeline trading video. Today we're diving deep into Bitcoin, looking at key levels and identifying potential buy zones. Let's get right into it. Right now, Bitcoin is holding a major technical level, and that's a big deal. Why? Because at this point, I'm actually less bearish on Bitcoin than I am on the broader stock market. As equities continue to show weakness, I expect we'll see some degree of capital rotating into Bitcoin over the coming months. Now, that doesn't mean Bitcoin is immune to downside, but relative strength is what matters, and right now, Bitcoin is showing it. Let's start by looking at the daily chart. Bitcoin recently pushed lower, but the key detail is where the price closed. Even though it traded below support during the day, the price managed to reclaim and close back above a critical pivot level. That level is right in the $73,000 to $74,000 zone. This area is important for two main reasons. First, it marks the breakout pullback low from April of this year. Second, it lines up almost perfectly with the prior cycle high from 2021, which Bitcoin has now respected as support almost to the dollar. During a broader market sell-off, seeing an asset hold its former highs as new support is a clear sign of relative strength. While it doesn't eliminate downside risk completely, it does increase the probability of a short-term technical bounce. So if Bitcoin does bounce from this level, where is it headed? The first meaningful resistance zone comes in between $85,000 and $86,000. This area previously acted as support before breaking lower, and as we know, former support often becomes new resistance. Any relief rally into that zone should be expected to face some selling pressure. Now let's zoom out to the weekly chart, because this is where the market structure really starts to tell a story. If you connect the 2017 cycle high to the 2021 cycle high, you get a long-term descending resistance trend line. Bitcoin has tested this line multiple times. The first test was rejected. The second test was also rejected. The third test resulted in a decisive rejection that marked the beginning of the current corrective phase we're in. This kind of behavior is classic market structure. Repeated tests weaken conviction until one side finally gives way, and in this case, that rejection signaled a major shift in the macro trend. With that context in mind, let's talk about probabilities. Historically, during Bitcoin bear cycles, the price tends to revisit the prior cycle high. In many cases, it even trades slightly below it before forming a longer-term base. In the last cycle, for example, Bitcoin dropped roughly 20% below its previous cycle high before it finally stabilized. If we apply that same framework to today's market, the 2021 high sits around $69,000. 20% drawdown from that level would place Bitcoin in the $55,000 to $65,000 range. That zone lines up perfectly with prior resistance that is now support. Heavy historical consolidation and what I see as logical long-term accumulation levels. From a structural standpoint, that remains the most likely area for a durable base to form if this correction continues. This is my base case scenario, but we always have to consider the downside risk. On the weekly chart, Bitcoin has formed a large head and shoulders pattern, and that pattern has already broken down. Using a standard measured move projection, the downside target from this structure comes in around the $34,000 to $35,000 range. Now, this is not my primary expectation. For Bitcoin to reach that level, we would likely need a significant breakdown in equities, widespread risk-off behavior across the board, and some kind of broader macro shock. If that environment materializes, then yes, Bitcoin could revisit the mid-30,000 range. That represents the tail risk scenario or the worst-case outcome. So when we step back and look at the big picture, the structure breaks down into three potential paths. In the short term, as long as Bitcoin holds that $73,000 to $74,000 zone, a relief bounce toward $85,000 to $86,000 remains on the table. The base case, my most probable scenario, is a continued corrective phase that ultimately finds support and forms a long-term base between $55,000 and $65,000. And the worst-case scenario, which would require a broader market unwind, points toward the mid-30,000 range. Looking even further out, that long-term resistance trend line continues to rise over time. If the next bull cycle develops later in the decade, that same trend line projects a potential upside into the $160,000 to $170,000 range. Now, whether or not Bitcoin ultimately reaches those levels is less important than respecting the structure along the way. Levels matter, trend lines matter, most importantly, risk management matters. Bitcoin is showing relative strength compared to equities, but the volatility remains high. The months ahead, patience and discipline will be far more valuable than any prediction. If you found this breakdown helpful, make sure to like, subscribe, and drop a comment to support Pipeline Trading. As always, stay disciplined, trade with intention, and God bless.